Hello, and thank you for watching this, our market alert video for today, which is Monday, May 9, 2022. And you may have noticed that the stock market, the S&P 500 index, had another dismal day. And one of the important things that happened today is that the stock market, the S&P, closed under 4,000. And that's an important point because 4,000 has been what many investors call a resistance level, meaning that the market, and we saw it throughout the year so far, is that when the S&P, the market went down, it bounced back from that, off of that 4,000 level. And in fact, Bank of America even said that if it crosses under that 4,000, that we could see it go to the next resistance level, which is 3,000. So if it goes from 4,000 to 3,000, that would be a 25% drop from here. Now, Bank of America is one of the more pessimistic forecasters, but you've also seen Goldman Sachs and JP Morgan and others come out and saying that we haven't seen the worst yet. This is only the beginning. And so my question to you is, and here's another thing that to consider, and that is there's an old expression that says, don't fight the Fed. And what the Fed is doing right now is they are at war with inflation. They want to tame inflation. And what is inflation? Inflation is when you have high demand and a low supply of products and services. And so if you want inflation to go down, you have to reduce the supply, or rather the demand, or increase the supply. Well, we can't increase the supply of services and goods in our country. We have supply chain issues on that side, and there's only so much that you can do with an economy our size. So the Fed most likely, and it appears, wants to reduce demand. If they reduce demand, they do that by raising interest rates. And if they do that and demand goes down, and you're a company that's selling products and services, and you have the demand go down for what you're selling, then you could see your profits go down too. And so the Fed is basically pushing down that side of it. The other side of the equation is bonds. Well, if you're a student of investing, you know that as interest rates go up, generally speaking, bonds tend to go down. So normally bonds are a safe haven against the stock market craziness. But right now, with the Fed raising interest rates, they're hurting stocks and they're hurting bonds at the same time. So finding a safe place to go right now, is difficult, and perhaps cash is king. So right now we have a situation where if you're within 5 years of your retirement or you're already retired, I would ask you, what's your plan? What are you going to do to protect your retirement? Now, our belief system is that you don't plan for the best and hope the worst doesn't happen. Our belief system is you plan for the worst and hope the best happens. So if you're a buy and holder right now, you probably are falling in the camp of hoping the best will happen, planning for the best and hoping that the worst doesn't happen. We don't think that's the most prudent strategy. So what I would encourage you to do is to help us to help you. And how would you do that? Our website is rpoa.com, and if you go there, you can click on Meet with an Advisor. We can sit down with you, look at your risk profile, explain to you our invest and protect strategy. This is the strategy that told us to tell our clients to get out of all equities in November of 2007, before the great stock market turmoil we saw in 2008. It told us to sell also literally the day before the pandemic was announced. So our strategy is designed to mitigate or minimize the amount of downside. As you know, our philosophy is that growth is important, but protection of principal is even more important. And if you're within 5 years of retirement or you're already retired, I think you understand what we're talking about. So I encourage you to go to our website and meet with one of our advisors. We'll do it at no charge or obligation. We want to help as many people as we possibly can to have a successful retirement, and we can't do it if you don't let us help you. So thank you for watching this video, and we will talk soon.